So we have a customer in process right now. He's got actually got two in the same category.
Okay.
So I've had a couple of times where I've had to explain this fact over the last week. So one guy's got $1.7 million in assets, and we're struggling to get him approved because the reason is, you know the answer, David.
Yeah.
He doesn't have income.
Yes.
Okay. So there's a big difference. We have federal regulations now in this fine country of ours that say, hey, you got to demonstrate, if you want to make safe mortgages, mortgage world,
yes,
that a borrower has income to pay back their loan, to
yes,
service the monthly payments.
yes,
Not assets.
yes,
Income.
yes.
So if you want a 30-year fixed rate loan with the great low rates that you hear me advertise on the radio, one thing you have to have is documentable income. So this guy is retired, and what he's doing smartly is he was taking money out of his non-retirement account, okay, because if you take it out of your retirement account, then you have to pay income tax on it.
Yes.
Oh, but then why? Because the government says that's income.
Yes.
But if you take money out of your non-retirement basket,
okay,
you can do things like harvest capital gains, which are cheaper tax rate, and it's really a smart thing to do. So, you know, let's say he'd been taking out $10,000 a month, but he was taking it out of his non-retirement account, which equals no income or very little.
Yeah.
And so what we had to have him do is start taking the money out of his retirement account, out of his IRA, which then turns that into taxable income, which we can then use to qualify for the loan. Okay, then I had another guy who came into my office, and we had to verify that he had $6,000 for closing costs or reserves or something like that.
To fund the property tax.
Oh, is that what it is? Okay. So he gives me a page from his account that has like $200,000 in it, but he just gives me the front page. And I said, Daryl, don't hit me. You're not going to like this. But I need all the pages. He said, it's like a quarter-inch thick. I know, I said. I need all the pages.
Yep.
Okay. Well, why? I've got $1.7 million of assets and great credit and blah, blah, blah. I said, here's what you have to understand. Getting a 30-year fixed-rate loan is not really about the credit quality of the borrower.
Okay.
It's really not. It's about meeting the manufacturer's specifications for all the documents that have to be in that loan. The manufacturer is Fannie Mae or Freddie Mac or fill-in-the-blank FHA. It's what is in their book. It says what pieces of paper have to be in there. It does not say if the guy's got great credit and $1.7 million in assets, then we only need the first page. Nope, doesn't say that. It says if you're verifying funds needed to close, you need the entire statement, all pages, even the one that's got the boilerplate language on it. If it says page 3 of 9,
intentionally left blank. We need that page.
We need that page. We need all the pages. Why? It's in the manufacturer's manual, and we can't get by without it. So if you're talking 30-year fixed rate money, the good stuff that everybody really wants to have, then you got to have documented assets if we need assets to close, and you got to have documented, verifiable income.
Well, and this is in contrast to highlighting the difference between income and assets, because you can have money in the bank and great credit, but if you just walked out of bankruptcy court 2 years ago but have an income, no problem.
And by the way, that's an FHA loan where we can lend 2 years after bankruptcy.